Ladies and gentlemen, welcome back to the Crypto News Podcast. It's your host here, Matt Zahab. We are buzzing as always. I'm still coming home from my parents' place. They're still traveling to Europe, but I'm pretty pumped to get back to my place in the city. Always love having another lad on the show with the best name in the world, and that is Matt. Super pumped to have the one and only Matt Mudano on the show today, CEO and co-founder of Arch, building the permissionless financial rails for a Bitcoin-denominated world. And I love this shit because we really need to start moving and grooving on Bitcoin, especially present day. Ooh, is it ever spicy? Matt began his blockchain journey while mining Bitcoin from his college dorm in 2012. Wow, sort of GOAT move there. And has had multiple successful exits in the consumer products and technology sectors. Now he's building the infrastructure to support fast, liquid, and composable Bitcoin apps, including DEXs, Perps, and more. Maddie, hope I can call you Maddie. Maddie, welcome to the show, my friend. Pumped to have you on. How you doing this lovely afternoon?
Thanks for having us, man. I hope you were a good son by telling your parents to buy Bitcoin as early as possible.
I did.
As well.
I did. Yeah.
They listen.
You know, we'll do this off the pod. Not as much as I would have liked, but you know how it goes. It's tough, right? But
Yep.
yes, and just for the viewers, my apologies, guys. The camera is obviously not where I want it to be. I'm not at my regular spot, so I'm going to be looking on one screen, looking on the other. Maddie, you are in Vegas right now for Bitcoin conference. Not there this year, obviously, as I'm in Toronto, but how sweet is being in Vegas? One, I still don't know if I love that city or if I hate that city, but what's the energy like? Can you feel, is it like I was in Toronto last week or 2 weeks ago for Consensus, and you could feel the crypto energy in the city? You saw the signs everywhere, the events. Is that happening in Vegas? Is it a crypto takeover?
Yeah, man, it's electric right now. You just see a total descendance upon Vegas right now. You see all the billboards.
Oh, I
When
love
you
that.
go walking through the airport, you see lots of signage for, big Bitcoin companies, whether it's, digital exchange or custodian or something of the sort. But it's very clear that there's big money around. And then you start to see the big wigs, between Michael Saylor and the Trumps, JD Vance, everyone started to be a little bit more present. And I think that's, a signal for the rest of the ecosystem that we're, on the right track here.
Well said. Man, I wish, this is going to be such a good episode. There's so many things I want to talk about here. Bitcoin right now is absolutely, I think we're in a really, really good spot. And I don't want to start with this, but I think we're going to start with it. Screw it. What's your take on the publicly traded companies that have Bitcoin on their balance sheet? And just for a little reference here, I worked with Cypherpunk Holdings, who was, I think, actually the first company ever to do it back in the early 2020s. And now they're Soul Strategies, and they're doing great work in the Soul Strategies space. Shout out Tony and Leah. Back in the day, there weren't that many companies, and the debt offerings weren't as vicious as they are right now. Do you think, and this is just a bit of a hot take by me, but I think when the market does tank, and it always does, it's crypto, we've been in the space, we know how it works, I do think this might cause a bit of an issue. What do you think about that?
I think it's interesting seeing how these Bitcoin treasury companies have kind of progressed and evolved over, quite frankly, like less than a couple of years. Obviously
So
Michael
quick.
Saylor with MicroStrategy
Yeah.
set the bar for, this concept of hyper accumulation of Bitcoin, but he's leveraging debt against his company in order to accumulate more, right? So that's one way to do it. And now you're starting to see these other Bitcoin treasury companies that are actively managing their Bitcoin treasuries for yield so that they don't necessarily have to leverage the shares of their company in order to keep buying. They can actually earn some form of yield on their treasury assets. Like I know 21 is doing something of the sort. You also see Nakamoto, who recently did a SPAC offering, and they're really focused on powering Bitcoin apps, not just holding Bitcoin as a stable, or a stable reserve asset. So I think that's kind of showing where the ball is going, or where the puck is going, where Bitcoin is really turning from a reserve asset just be passively stored in cold storage to something that can actively be managed for yield.
Yeah, well said there. These numbers are wild, though. I don't know if you saw the most updated chart, but it was like Satoshi still has the most with, I think he's got 1 million. Coinbase has a shit ton. Binance has a shit ton. I think BlackRock may have surpassed Satoshi. I think they might be the biggest in the world now, but there are some big dogs in regards to like
Tether as well,
right.
holds a ton
Tether
of
holds a
Bitcoin
shit
as
ton.
well.
But like, it's crazy because you already have that, whatever the rumor is, 4 million, 5 million, 6 million. Some people say it's close to 10 million Bitcoin, almost half of all Bitcoin are gonzo for good, right? So now it's like, okay, it's not actually capped at 21. Well, let's just say it's capped at 15 for the sake of ease. And you have these big dogs who in a couple years will probably own like legit 50% of the whole float. like, I don't even know if that's priced in either, you know?
Yeah, like I think scarcity has really driven the speculation of Bitcoin, historically speaking. But I think you have different driving forces here between, the ETFs that are obviously, getting a lot of institutional adoption and retail adoption. You have countries and companies that are putting it on their balance sheet, but now you have more of this DeFi infrastructure that's bubbling up under the scenes that really is going to be a supply sink for Bitcoin as well. So it was like an opportunity to front run the scarcity and demand of Bitcoin as a reserve asset. But as it becomes more productive, it's going to turn into more of a in demand asset to participate in DeFi and leverage opportunities and trade strategies, structured products, things of that nature, which I find fascinating.
Well said. Before we get into you guys and actually building on Bitcoin, the lack of programmability, which I can't wait to get into, let's continue on the momentum train for 1 second. And I don't want to talk about price or anything like that. I think you and I are in the same boat. I think both of us think that it has very high ceiling, but just short term, maybe even midterm, long term momentum. How do you see Bitcoin, again, price aside, how do you see Bitcoin playing out, perhaps from more of a qualitative perspective, people coming in, talking about it, it being on Bloomberg, it being on the main TradFi pub, so on and so forth. How do you think that plays out over the next, perhaps, 6 months, end of year, and maybe the next couple of years until 2030?
Yeah, I mean, I think it's been awfully cozy in the Bitcoin world if you're just long Bitcoin versus some of these more speculative innovation tokens, I guess you could call them, whether it's Ethereum or other protocols and Solana and meme coins and all that. It's been quite comfortable sitting in Bitcoin and spot over the past year, and that's a function of what I just mentioned, just like unprecedented amounts of demand and adoption from both retail and institution, and it's only going to keep progressing as time goes on. And along with the DeFi sync coming, I think it's a really bullish case for Bitcoin, which it's been nice to see this kind of play out over the last few cycles.
Yeah, well said there. Let's get into you guys and programmability here. It's 2025. Jesus, we're almost at literally we're 7 months away from 2026, which is wild. I felt like I wrote down my 2025 goals yesterday. That was literally almost 6 months ago. We're in a pretty good place, cozy place, like you said. My one ick with Bitcoin present day, and I don't know if I have the right for this to be an ick, Maddie, but I look at how incredible of an asset it is, how bulletproof it is, how rock hard it is. What's the word Sailor uses? Oh God, it's something like bulletproof, money proof. What does he call it?
Sound money,
sound money.
Bulletproof, pristine, something like that.
Yeah, bulletproof, pristine, sound money, which it is, and that's the main narrative. But I think of what the Bitcoin narrative could look like if you could actually do shit with it.
That's right.
And that's what and that's what you guys are doing. So my first question, Maddie, is why have we still not really, and again, teams like you, incredible teams like you guys are working on it and are very close to cracking this code, but why in 2025, after 15 years of an ecosystem, have we still not figured out how to make this shit programmable?
Well, first and foremost, there was an intentional design choice where Bitcoin just left it behind and prioritized more things like security and uptime over expressivity, right? And that changed a few years back when the Taproot upgrade allowed you for the first time to be able to store arbitrary data on Bitcoin, for better or for worse, depending on who you ask, right? The Bitcoin maxis are like, don't graffiti on my perfect internet money. And then everyone else in the design and scaling space are like, we need this critical piece or upgrade in order to do this more programmable stuff without necessarily changing Bitcoin underlying, core architecture. But, I think what's really coming to a head here is, as Bitcoin is becoming the most successful ETF launch in human history, it's not just a signal, it's a milestone. It confirms that institutions, governments, corporations are beginning to treat Bitcoin not just as a speculative asset, but as a strategic reserve asset. And that just continues to strengthen this narrative. And it has two pretty profound effects on Bitcoin adoption. You have, broader adoption as a monetary base layer. So if corporations and countries can begin to hold Bitcoin like they once held gold, it pretty much cements Bitcoin's role as sovereign, neutral store of value, right? A hedge against fiat debasement and geopolitical instability. And then once you have that dynamic, now you have an incentive to build financial infrastructure around it, because now they have it, now they want to use it. So the more capital that flows into Bitcoin, the more demand there will be to do something with it.
Yes.
And that's how reserve assets become active capital, fueling a Bitcoin-denominated financial system. And that's really what we're set out to do, building lending applications, stablecoins, structured products, and a lot more, mortgages, things that we can actually use Bitcoin for in everyday life to impact people in the real world as well as businesses.
Yeah.
So long-term, Bitcoin becomes not just a hedge, but a backbone of a whole parallel financial stack, a settlement layer for global finance.
And this is where things get really exciting, because like the loans you talked about, the multitudes of product offerings that you just brought up, that makes sense for Bitcoin, because like when it comes to a loan, like I don't need it. I don't care about, 1 millisecond TPS. You know what I mean? Like it doesn't need to happen right away. We can still do that on Solana. We can still do that on Ethereum, or perhaps one of the newer chains that are coming into the market. But for the things that don't have a time crunch, why not do it all on Bitcoin? You know what I mean? Like I feel like Bitcoin will take so much market share from the other cryptos for anything that's not, hey, this needs to happen right away. Like mobile gaming, yeah, no shit, it's not gonna happen on Bitcoin. Obviously, we get it. But like at all the things that you discussed, every other crypto is hoops in my opinion, because Bitcoin will just steal all its market share if we can figure out how to make this more programmable.
Absolutely. You said it.
It's sort of wild, do you think that's priced in yet?
I honestly don't think so, because the more and more people that I talk to, whether it's miners or liquid funds, family offices, and just, omni-chain DeFi users, whether they're on Ethereum, Solana, or elsewhere, they're all stuck in this mindset that Bitcoin is just this reserve asset. You can put it into a pool, you could borrow against it as collateral, and then you take those stable coins into DeFi and you try to find some arbitrage or yield. No one's actually thinking about how we can set up a whole Bitcoin-denominated DeFi ecosystem, which is really what's going to drive demand for Bitcoin and thus the yield. It's a lot harder to convince people to participate in DeFi on Ethereum holding a token that's down only, right? So you wanna be holding
Shots
Bitcoin.
fired.
That's where everyone ultimately wants to find their safe haven, is in Bitcoin. And a lot of people look at stable coins for that, but you have to remember stable coins are pegged to the dollar, and if the dollar is devaluing every single year, and Bitcoin is that hedge against inflation, hedge against the currency debasement, then you're not even safe in stable coins, you're safe in Bitcoin. That's why the price keeps going up, is because people continue to suss this out and become a little bit more confident in where it's going.
So many great points you just brought up. To build on that, Maddie, I think the brand is massively underlooked as well. Like if you ask people, you brought up my parents and Bitcoin, like I think my parents could probably name half a dozen cryptos. Most of their friends can probably only name one, and we know what it is. It's the big orange one. If you went to Times Square and just picked 100 random people, hey, name me as many cryptos as you can, of all the people who can at least name one, every person's going to name Bitcoin. Like when people think of crypto, they think of Bitcoin. It's synonymous. And then when you say, hey, dude, there's this really good opportunity in the crypto space and you can get 10% APY if you hold stablecoin XYZ, they're going to be like, I've never heard of it. It's a little sketchy, blah, blah, blah. But if you're like, hey, you can do this on Bitcoin, I feel like a lot more people would be pretty down to join the ecosystem, because it has the Bitcoin
and if
word.
They knew that they could spend like money in their daily lives against Bitcoin, and it allows them to hold it in an easier way. I think that will allow them to, I guess, put them in a position to hold Bitcoin easier if the infrastructure, especially on the fintech side, catches up. You mentioned like Bitcoin is not fast money. It certainly can be. We saw Lightning Network try to fill this gap where we can use Bitcoin as payments at coffee shops and, stuff like that. And it didn't quite work out that way. But I think that we're in a place now where, with the massive amount of retail adoption and people wanting to use Bitcoin, especially in these more emerging nations where there's a lot less trust in the financial infrastructure of that country, that you're starting to see them hold Bitcoin and want to use it a lot more. So I think that the more the infrastructure evolves, Bitcoin can become faster. It doesn't need to be this slow, clunky digital gold that can't be utilized. And that's a lot of what Arch is focused on building, is working directly with fintech providers so that we can be at the point of sale using some form of Bitcoin that is within our network, but much, much more performant. And it's not that clunky and difficult piece of digital gold to manage.
Well said. Perfect segue into Arch here. Before we get into it, huge shout out to our sponsor of the show, and then we are going to take a deep dive into Arch. Huge shout out to Prime XBT. We love the team at Prime XBT. as they offer a robust trading system for both beginners and professional traders. Doesn't matter if you're a rookie or a vet, you can easily design and customize your layouts and widgets to best fit your trading style. PrimeXBT is also running an exclusive promo for listeners of the Crypto News podcast. Use the promo code CryptoNews50, that is CryptoNews50, CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. Again, CryptoNews50 to receive 50% of your deposit credited to your trading account. And now back to the show with Maddie. Give me the TLDR, give me the elevator pitch. What's going on with Arch? When someone says, hey, what do you guys do? Tell me about it. And then I'll drill you with some nitty gritty stuff here.
Yeah, so obviously our go-to tagline is we're building the permissionless rails for a Bitcoin-denominated world. But ultimately what that means is we're building this smart contract framework, the infrastructure to allow for developers of applications, blockchain applications, to tap into the native Bitcoin distribution, liquidity, users, by giving them a native experience. The developer experience a little more similar to building on Solana because we have a very similar stack. But we've custom built this VM, this ArchVM, tailored design for Bitcoin architecture. So ultimately, developers of applications like borrow and lending, Perps, DEXs, order books, prediction markets, etc., it feels like you're interacting with a Bitcoin smart contract, and sort of all the magic happens under the hood. But that's all really an innovation of what Arch bring, which was this specialized VM that can do more Bitcoin native things, whereas everyone else is more or less a EVM rollup of sorts where you bridge into the ecosystem and then you can play around and then can eventually withdraw back to Bitcoin, where this is settling smart contracts at a granular level on Bitcoin.
So the smart contract level is sort of how you guys differ from the other competitors in the space right now?
I mean, I would say like all these other L2s or chains generally offer smart contracts. The difference is the manner in which it settles to Bitcoin. Usually the way that the flow works for any EVM aligned L2, like Bob, Botanic, Citrea, Merlin, you basically have to bridge your Bitcoin over to their network. They're going to mint an ERC20 token representation of that Bitcoin on that chain. And now you can do EVM smart contracts on that chain. And whenever you're ready to leave, then you just bridge out of that system back to Bitcoin. But that's different than how Arch works. With Arch, you just go whichever application that's built on top of Arch. You interact with this said application. You use your Bitcoin wallets and you're signing Bitcoin transactions that are generated by the Arch VM on your behalf. And you're just signing those Bitcoin transactions. So from you as a user, you're not bridging anywhere. You're not using MetaMask wallets or anything like that, doing EVM programmability. This is all totally native Bitcoin programmability. And by the way, every single time you're signing a smart contract on Bitcoin, we're driving demand for block space on Bitcoin because we're paying Bitcoin fees and we're settling those transactions to the base layer, which is ultimately why we're a little bit more aligned with the mining community and the incentive alignment of Bitcoin itself. Because at the end of the day, we need to scale the base layer before we could think about scaling Bitcoin further than that. Right now, the mempool is pretty dry with the fee rate of like 1 sat per VByte. Right, we need to actually juice that mempool to create more demand for block space, which is going to pay the miners. And ultimately, when the block rewards kind of reduce after each halvening cycle, we need to make sure that there's enough incentives and fees that are going to those miners via base layer activity. And that's going to be a really important thing as time goes on for the sustainability of Bitcoin.
What a point. Dude, 440 episodes. No one's ever mentioned that before.
Yeah, it's interesting. Like people think that these block rewards are going to keep going forever, but the whole point of the design of Bitcoin was that they're eventually going to run out or drastically reduce.
There will be
Correct.
an inflection point where it's like, hey, like I'm going to need another way to get incentivized here.
Exactly. Right. So like if the miners can't get paid, they're not going to continue to take a loss and securing the network, right? And the whole beauty about Bitcoin is that we have this progressive decentralization where anybody can participate in its consensus and it can progressively decentralize over time. But if the miners are not profitable, only the biggest publicly traded miners are only going to be the ones that could stay in business because they can keep losing money forever. In the public markets, it doesn't matter. So they can stay afloat, but Bitcoin becomes less decentralized over time. And you have fewer actors that are safeguarding the network, which is bad for Bitcoin as a whole. So we need to make sure that there's a constant demand for block space and driving demand for settling data back to Bitcoin constantly and paying for that data so that the miners can continue to get paid and the security of the budget of Bitcoin can be safe.
Dude, what a line. That's pardon my French, but that's fucking awesome. I also don't know how I didn't think of that, or no one else has brought that up before on the pod in 440 epis, but well done, Maddie. Well done.
Well, you see a lot of this issue rearing its ugly head in the Ethereum ecosystem right now, right? Where a lot of the value is leaking to layer twos and sequencers like
Yeah.
Base.
Yeah.
And you're not necessarily paying for the validators to stake Ethereum, right? And that's why
Yeah.
Ethereum price is going down, because there's far too much value leakage down to the layer twos in this whole modularity approach. But we need to be thinking about how we can actually create one cohesive, sound ecosystem around Bitcoin, so that we can make sure that it's sustainable and has enough fees for the miners to stay in business.
What a point. I love that. Talk to me about ArchVM. What, like, give me the, without going like too techie on me and all, you know, what exactly makes ArchVM unique, and how did you guys sort of whip it up? And again, I know this is a tough question, but do the best job you can without getting nitty gritty into the tech stuff.
Yeah, without getting like too into the weeds for the non-technical listeners out there, if you're familiar with how Solana works or the key innovations of Solana with parallel execution, we forked the exact same repo that the SVM was created from. So we have a very high performant and fast blockchain with sub-second blocks, just like Solana has. What's really interesting about the independent state and parallel execution model that Solana really pioneered, whereas Ethereum is a global state with sequential execution. It's a much more single-threaded VM versus this parallelized VM. Is UTXOs, which is foundational to Bitcoin's architecture, are meant actually to be processed in parallel for non-overlapping states. So the SVM architecture lends really, really well to Bitcoin. And so we started with that and created this novel VM that pays tribute and homage to Bitcoin's core architecture and allows developers to actually generate native Bitcoin transactions, index the mempool in real time, which is necessary for doing some more performant type of things like intra-block trading. You know, most apps in Bitcoin, you have to wait for Bitcoin confirmation or maybe 4 Bitcoin confirmations before you can actually trade on that state again. On Arch, we're able to index transactions in the mempool and track all of the dependent states that happen within the block, so that we could actually enable people to trade on the same state within the same block. So it feels like you're moving at the speed of Solana or Arch, where you're still on Bitcoin. It's just we're utilizing something that's a little bit more specific. And again, that's a result of the VM, where the EVM and the SVM are not aware of Bitcoin. They can't do Bitcoin transactions, can't construct those transactions. So using an EVM or a SVM fork was never an option for us. We knew that in order to give a more native experience at the base layer of Bitcoin, we needed to build a VM from scratch that was designed specifically for it.
Wow, that must have been a bit of a shit show, no?
I mean, on a difficulty level, it's up there, because all of the friction points that, copy paste rollups don't have to deal with, which is, developer resources and tooling and open source things, oracles and bridges and RPC providers, they much more prefer EVM because it's just a copy paste deployment, where learning a new VM is a lot more friction on the front end. But where we have a little bit more friction, these EVM L2s have a different kind of friction, and that's more on the user side, where they don't necessarily want to bridge their assets, these layer twos, because that's where a lot of the friction is for Bitcoiners, right? They don't want to give up access to their Bitcoin. They could have bridged to Ethereum years ago to participate in DeFi, but still haven't done so, at least not in a meaningful amount of liquidity, right? There's only about 15 billion in wrapped Bitcoin across all of EVM chains, compared to the 2 trillion in liquidity on Bitcoin. So it's a very, very small percentage of Bitcoin that people have been willing to bridge. So we're not going to deal with that same friction that these other EVM L2s will deal with, because we've abstracted a lot of that friction away and made it a much more native experience. So it's kind of like a pick your battles. And I think that,
Well said.
we're optimizing for a long-term, like a long-lasting contribution to the space. It was very difficult for Solana early on to get developer traction, because everything was Solidity. The whole network effect existed on Ethereum.
Yeah.
And then, of course, Solana came with this Rust programming language and parallelized VM, and people were like, I don't really want to leave Ethereum where everything's happening, back in 2020, right? So they refer to this as the chewing glass phase of Solana. So we're dealing with our own little chewing glass phase of ours right now. But the good developers that recognize the opportunity and where there's going to be an advantage in terms of user experience, they're building with us right now, and that's what's most encouraging.
I hate the term bullish, but This is one of the few areas of crypto that really excites me is Bitcoin DeFi and the future of Bitcoin programmability. Just you look at like no brainers in life, like where it's like so obvious it's in front of your face. And this is just one of those. And we still haven't seen the floodgates open yet, which really excites me.
Yeah.
Speaking of the floodgates opening though, your team sent over a really interesting stat. Bitcoin DeFi has grown 1,700% in the past year to $5.4 billion. Pretty wild. Is there, besides the obvious Bitcoin, price of Bitcoin go up, institutions getting in, ETFs, blah, 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 is there a non-obvious growth factor that's been driving this that we're not cognizant of, that we're not aware of?
Yeah, it's the programmability piece. I can't keep beating a dead horse with it, but I will if since this is my job. But Bitcoin is the most trusted, secure, and widely held digital asset in the world, but it's trapped in this vault. Without programmability, Bitcoin is just passive capital. So that's a problem because programmability is really what turns money into economic infrastructure. It's what lets you build things like lending markets and stable coins, insurance, cross-border payments on top of that base asset, right? So Ethereum and Solana showed what's possible, but the capital base there is tiny compared to what exists on Bitcoin. If you want to truly build something that is, permissionless financial system that's truly global, you need to build it around the best base sound money, the bulletproof money, like you said before, and that's Bitcoin. The challenge is doing it in a way that respects Bitcoin's principles and its incentive model. Like we said before, we need to make sure that we drive those fees back to miners. And that's why this new wave of Bitcoin native infrastructure like Arch is so important. We're not just copying Ethereum and the Ethereum roadmap or the Ethereum principles and all that baggage and bringing it over to Bitcoin because now it's, the design space is opening up. We're building an execution layer that honors Bitcoin's main ethos and settles back to the base layer. So without programmability, Bitcoin is just digital gold, but with programmability becomes a foundation for a new global economy. And that's really what is the biggest opportunity of this cycle and next cycle.
Yeah, I agree there. Future of Bitcoin DeFi. I know we've had a lot of future, forward-looking statements, but is anything going to be very different from how it appears it's going to be? Like you talked a lot about the programmability, the loans, the stable coins, the lending. Are there any crazy non-obvious use cases that are going to pop up out of nowhere? Like in your mind, what does the future of Bitcoin DeFi look like?
Yeah, so we get this question a lot, and on one hand, I think, the saying goes like there's nothing new under the sun, right? And
Yeah.
I think you're going to see a lot of the same tried and true DeFi protocols and strategies that are essentially brought over to Bitcoin that do similar things. Right. But the most important thing is that everything is denominated in Bitcoin. So that drives the demand and thus the yield for it. So yield for Bitcoin has actually been really untapped. You see lots of protocols that offer yield for Bitcoin, but this is mostly just inflationary incentives by protocol tokens, perpetuating this like DeFi Ponzi game over that's existed on Ethereum for the last 5-6 years. But in order to actually achieve truly sustainable forms of yield, we actually need to create demand for Bitcoin, the asset. And that really comes from this, Bitcoin-denominated DeFi construct, which is, of course, our first priority is building the primitives out of an ecosystem that can spin off yield. But what I think you're going to see secondary to that, and I'm already starting to see signs of this in just average everyday life, is you're starting to see these Bitcoin companies that will serve a very specific niche, whether it's in individuals' lives or companies' lives. Like, for example, there's a company called Meanwhile that's doing Bitcoin-denominated life insurance policies. This is pretty cool. If you're living your life in Bitcoin-denominated terms, it makes sense to also hold a life insurance policy that's fully exposed to Bitcoin as opposed to fiat. You see with People's Reserve, a hybrid Bitcoin-backed mortgage where now you can use your Bitcoin to get a traditional mortgage for a house without having to sell your Bitcoin or go get a traditional mortgage from a regular bank. So they consider both the Bitcoin and the house as collateral in combination, which is pretty cool. And then there's other companies like that are doing more factoring services for companies that, factoring is basically cash flow management for businesses so that they can keep on manufacturing or doing their thing while they have, some accounts receivables. You're not going to see GameStop or some major Fortune 500 company putting Solana on their balance sheet like you have been recently with Bitcoin. So the next step for those companies is how can I actually use this asset to, make business a little bit more like less cumbersome, but while holding Bitcoin. So you can actually use Bitcoin as a business and get a factoring type of loan, a short-term loan where you're leveraging the assets on your balance sheet. So I think these are going to be some of the things that you're starting to see Bitcoin and it being a little more novel use case of crypto into the real world, because naturally Bitcoin is more widely adopted and accepted amongst institutions and your parents and my parents. So I think you're going to see these use cases forming around them wanting to utilize those assets in a more productive manner, and businesses where you don't see those types of things happening in Ethereum and Solana.
Matty, what an episode. Appreciate you coming on. Oh, shit. One thing I forgot to ask. $13 million raise. Congrats. Well-deserved. Pantera as well. A grade A VC fund. Very quickly, how's that funding accelerating your guys' vision and goal, and how are you deploying that capital? What are the biggest pain points that you're throwing that money at?
Yeah, we're lucky to have them as partners. They are long-standing proponents of Bitcoin. So it really aligns with, our idea of aligning with thesis-driven partners. We had Multicoin lead our seed round last year, who also very, very big thesis-driven investor. And we did the same sort of trend here with Pantera. And we're just, we're over the moon to have these guys in our corner, and they'll be deploying some Bitcoin into the ecosystem here pretty soon for yield and to, stake some claim here in the eco. But what this funding will ultimately be utilized for is to, of course, scale engineering talent. We've got a great team of engineers, but we have a lot of work to do in scaling the infrastructure and closing the gap on the developer experience. We do have some, more operational needs as well, marketing, go-to-market support, things of that nature. So, TLDR is this is meant for growth and acceleration to make sure that we're, in a good place to capture this giant opportunity.
Matty, what an episode. Really appreciate you coming on, and enjoy yourself in Vegas. Have a blast. And I was going to make a joke, but it's a kid friendly pod, so I won't make the joke. But where can our listeners find you and Arch before we let you go?
You can follow both of our accounts on Twitter, Arch ARCH, and Arch Network. No vowels on the network, so NTWRK for those two handles. My personal handle is Proof of Mud. So follow me for more thought leadership and content about Bitcoin, and put notifications on because Mainnet is soon. So be doing some giant incentive programs for the early users and power users of the platform. So come experience what Bitcoin yield looks like, and farm some tokens while you're at it.
Love it. Folks, what an episode with Matt Mudano, co-founder and CEO of Arch. He was dropping knowledge bombs left, right, and center. Always a treat and nice and refreshing to have a Bitcoin epi on the docket. Bitcoin momentum, programmability on Bitcoin, the future of Bitcoin DeFi, with a bunch in between. Huge shout out to Maddie and the team for making this happen. If you guys enjoyed this one, I hope you did. Please do subscribe. It would mean the world to my team and I. Speaking to the team, love you guys so much. Thank you for everything you do. And back to the listeners, love you guys too. Keep on growing those bags and keep on staying healthy, wealthy, and happy. Love you guys, and we'll see you on the next one. Ciao.